Yo, yo, what's good, crew? We are officially in Puerto Rico, baby. This is the first recap I think I've done in Puerto Rico so far, so this should be fun. We had a decent trade this morning. We also had a decent trade yesterday to start Monday. Honestly, these past two trades, I just haven't hit the targets that I've really wanted to, or that I've hit in the past. There definitely been some smaller trades the past few days, but still, the 2 days added up. We're up about $1,200 to start the week, to start the month as well. These are my first trades of the month, so we're doing all right to start the month. Being pretty consistent on the wins, but the wins just being smaller than normal, and I'll talk about why. I mean, obviously, just to start, the first trade that I took yesterday, I really only had conviction for about 20 points, but it was a beautiful setup. I took it anyway. Long story short, we dumped like 75 points, and I definitely should have been holding longer. And similar thing this morning. I mean, we caught a beautiful trade. Here, let's just get into the recap right now. I mean, let's just jump right into it. So, long story short, higher time frame this morning. I was thinking, okay, we're kind of forming a bit of a market maker sell model on a 4-hour time frame, right? The past few days we've seen us go up. We have that weekly SMT. We have an inversion of order flow here. Where's my drawing? All right, so had an inversion of order flow here. Obviously, 4-hour inversion. We had 4-hour order flow up here get inverted as well. But for me to be actually bearish on a higher time frame, what do we need to do? We actually need to run through this gap right here, right? So we did run through that. We also got a change in the state of delivery on that leg, right? The leg that swept liquidity of up close candles got closed below. So that is a change in the state of delivery on a 4-hour time frame. So going into the morning, I was bearish, right? I did think the draw on liquidity was going to be the sell side lows. I had these marked out, and I was right on that. We tanked right into those lows. But I really didn't have any setup for that this morning. I mean, there was a setup earlier, but I would have had to wake up really early this morning. I wasn't up and around. So I did not catch the setup down to sell side liquidity, which was all the way basically down here. But I knew it's either, one of two things are going to happen, right? We're either going to go down to sell side liquidity. Let me get my chart. Here we go. We're either going to go down to sell side liquidity and just keep rugging, right? We're going to get displacement through these lows, and we're going to go where? Well, I had standard deviation of this manipulation leg. So where would I think we're going if we're running through those lows and running through this bullish order flow here? I think we're going to go to the first target of standard deviation, right, on the 4-hour manipulation leg, which is about these lows, right, 19,100. But I knew, hey, we have this PD array here. If we want to come and just sweep these sell side lows, I could look for a buy model to go back test, London high, Asia high, this inverse we made, right? We inverted bullish order flow here. We had a change in the state that we needed to back test. So higher time frame, I'm still bearish, right? Higher time frame, I'm still bearish, but also on the higher time frame, we're tapping into a 4-hour PD array. We're sweeping sell side liquidity, and there's potential for a lower time frame buy model, right? I like to be aligning timeframes as much as possible. Now, even though we're in a market maker sell model on the higher time frame, there is potential for the morning, right, to have a buy model here because we're tapping into a 4-hour PD array. We have SMT, right? We had internal SMT as well as SMT at these sell side lows. You can see ES never went and took those sell side lows. So we have external SMT there, which on a higher time frame, it's still actually internal, right? But then you zoom in even more. What do we have at these lows? We have internal SMT at these lows as well, right? So that was double confluence there. And then what did we get? I mean, my entry model was super simple. You guys know the forever model, or at least most of you probably do. My entry model was simple. We got our manipulation leg that swept liquidity. ES did not sweep liquidity on that leg. And here's a little tip and something I'm getting better at as well for you guys is always be trading the asset that has swept liquidity. Now, you guys have seen me pretty much only trade NQ in the past. I love NQ, right? If I can trade NQ, I want to trade NQ more than I do ES. But long story short, it doesn't matter. As long as you're using a futures calculator and you're always risking an amount that you're okay with risking, right? It doesn't matter which asset you're using. You just have to risk properly. And I've just found over the past trades that I've taken where I wasn't trading the asset that swept liquidity, it's been a worse trade at the end of the day. My data would be better. My P&L data would be much better if I had been trading the assets that have swept liquidity. So that's something I'm changing a little bit. More times than not, I'm able to find a position on NQ where we swept liquidity, right? But sometimes ES is the asset that sweeps liquidity. So just a little bit of a tip there. Always be trading the asset that swept liquidity. But long story short, what do we do, right? What do we do? Well, we came down, we swept high time frame liquidity, right? Which is beautiful. Now, after that, I don't just look for, okay, forever model, let's go straight back up. I want to see more structure form, right? And that is what we saw here. We saw a sweep high time frame liquidity. Then we got a bounce, right? We tried to tap this. We tapped into this fair value gap, didn't quite run through it, right? Sometimes we will run through that fair value gap, maybe even get a change in the stated delivery all the way up here. And that's where a lot of people will long. And then what do? We go back test and sweep the lows internally, right? I always am waiting for that first leg that actually swept high time frame liquidity. I also want to see that get stop rated, right? I want to see this complete low right here get completely rated, right? And that's exactly what we saw. We rated that stop. We put in SMT internally. And then what did we do? Well, we created a bearish fair value gap on the 1 minute time frame that got absolutely violated and ran through. And keep in mind, what time is it right now? It's 10 o'clock Eastern, right? It is 10 o'clock Eastern. This is prime time. This is when the 4 hour candle is opening. There are 2 4-hour candles every single day on futures, right? One of them opens at 10 a.m. Eastern. The next one opens at 2 p.m. Eastern, right? And before I talk about this trade real quick, little classes in session. I did this on stream earlier, and I've done this before, but let me do it for you guys, right? Every candlestick in the market, guys, how does it move? Doesn't matter what time frame. How does it move? Well, a bullish candlestick opens up, manipulates lower, moves higher, right? Distributes higher and closes. And a bearish candlestick is precisely the opposite thing. We open up, we move higher to manipulate, we distribute lower, we close. Right? So knowing this and knowing that there's only 2 4-hour candles of the day, what candlesticks do you think I want to be trading? The 4-hour, right? And that doesn't mean I'm sitting on a 4-hour chart taking my entries there. That just means I want to identify the manipulation on that 4-hour candle and trade the distribution of that, right? And we'll talk about how I kind of failed to trade the whole distribution today. I definitely missed out on some profits. Still did well, still made some money. Great risk to reward on the trade we took here. But long story short, I could have easily had more conviction for higher, especially given the 4-hour candle distribution that we usually see, right? But long story short, knowing that, right, I know going into 10 o'clock, okay, this 4-hour candle is opening. I'm trying to identify manipulation, which I think is this leg down, this whole leg down to go manipulate these lows, and then extra manipulation, right? Internal manipulation here to go sweep these lows, right? And then what do? We inverse fair value gap, right? We run through and violate bearish order flow completely. And then we get a change in the state of delivery right here, right? Change in the state happens. Basically, right after that, I tapped in. I was generally the next candle that comes after a change in the state is going to go and turn red and back test that change in the state slightly. That's usually my entry. Unfortunately, it didn't quite do that this time, and I entered a little bit faster. I got a little bit of a crappy fill. I got an even crappier fill on my third account, because only 2 of my accounts are actually connected. The third one I have to go and like take the trade on as well. So I got a little bit of a worse fill on there, but it didn't matter for me. I was very confident in the draw on liquidity for today, which was these highs for me. Right now, this morning I was in Spaces, and if you guys listen to Spaces, you heard me say this. I said London high, Asia high. I think after taking these sell side lows and after I've seen the structure at these lows, I think those are the draw on liquidity today. But standard deviation kind of scared me out, to be honest. And there was so much price action to the left that I was honestly scared to hold all the way to London high. I was scared to even hold to these highs here. I should have at least held to those 7 o'clock highs from this morning. But, is what it is. Couldn't do it. Still got a 1.19 risk to reward ratio, right? So still a great risk to reward ratio, not nearly as good as I usually have, of course. I'm usually aiming for at least 1 to 2, if not 1 to 3, 1 to 4, right? Those are the trades I generally like to take. But even with this, the risk was great. I was only on 2 contracts per account with 3 accounts, right? So we total 6 contracts. And I was targeting these highs. It was that simple. We got those highs. We ran straight to there. It was a beautiful trade. Right. Basically, after I entered, we didn't have much drawdown at all. Just a few of these little candles. So it was nice to not have to sit in any drawdown or anything. But again, just another day for me where I kind of failed to identify the proper target, the proper draw on liquidity. I mean, and it's funny because today I actually had the proper draw on liquidity. I just couldn't get myself to hold to it. And if you look back on the charts now, we actually NQ, you could have held all the way up into these Asia highs, but you can see we actually didn't hit those Asia highs, did we? Well, go back on your chart, look at ES. ES did hit those Asia highs. I'm not even going to draw it, but I had it drawn out earlier. Asia highs got taken on ES. They did not get taken on NQ. That is SMT divergence telling you to get out. And if you got long at any of the entry, like anywhere around the entry that I took, I mean, that position was over 200 points, right? So if you're not willing to take profits on that, I mean, that's ridiculous, right? That's where I'm definitely not waiting for Asia high in that circumstance, especially just being up that many points. And if there's clear SMT telling me, hey, I mean, this is SMT at a giant liquidity high, you're up 220 points, take profits, right? That's where I would 100% be taking profits. But there's definitely times where I'm not, just depending on the risk that I've taken, depending on my conviction for the high that we're taking, right? We ran up a lot this morning, and this move was kind of outsized that I was thinking, hey, I mean, even if you hit Asia high, it's 2-3 points more that you're going to get. It's not even worth it. If we have SMT on ES, should just be taking full profits out, right? So this was really the trade that I should have taken, or that I should have held. So unfortunately, we didn't get the profits we wanted today, but still up about $1,200 to start the week. So, I mean, can't really complain. It's a great week. We're staying consistent. Hopefully we can just, keep staying consistent and keep those losses small. But yeah, I hope that trade recap benefited some people. I hope you guys are kind of understanding how I'm looking at things. Try and keep it simple, always aligning those higher time frames with the lower time frames, and only playing when there's when we're in a high probable environment, and there's A+ opportunities showing up in front of us. If there's no A+ opportunities and I don't have any clarity in the market, I'm not going to be trading. It's that simple. You know what I mean? So past few days have been good. We have FOMC tomorrow. To be honest, I probably won't be trading. Why trade big red folder FOMC if I don't have to, right? If I see something extremely clear that is just, I have so much conviction on, I might take it, but it's very likely during the FOMC meeting, during the FOMC press conference, I'm not going to be trading. I'd rather sit out, watch the volatility, listen to some of the people on Spaces take positions, and just kick back, because I'm not willing to take the risk in that time. And that doesn't make me a poor trader, right? I used to think that made me a poor trader, not wanting to take risk in those, risky environments. But it's exactly the opposite, right? That's when most of the retail traders are getting bagged. They're blowing funded accounts. They're blowing real money, right? It's not worth it, right? I'd rather wait for high probable environments to be trading in and A+ opportunities. So I hope you guys, stay away from FOMC. And if you don't stay away, just manage your risk, right? As long as you're managing your risk properly, it can only go so bad. So I appreciate everybody that tuned into the video today. Make sure you're liking and subscribing. If you're not, we'll do some more videos out here in Puerto Rico. We're out here for a month, and to be honest, I'm probably going to end up moving out here. I don't see a reason to not move out here. So it's a blessing to be here. I absolutely love it. It's beautiful every single day. It's hot every single day. It's my place. I need to get surfing out here too. So everybody enjoy, like and subscribe. We'll see you guys on the next one.